Hi, I'm Georgette, and welcome to our show. Now, the purpose of this show is basically, look, we're trying to demystify the foolishness. We're trying to educate you as to what resources you have. We understand that times are hard. We understand that many of you out there have lost your jobs. And we're trying to tell you, look, you have options. There are resources out there that are available to you. We're here trying to teach you a basically new money mindset, have a new relationship with money. That's the reason we're here. We're here for you. Hi, today's topic is credit cards. Now, I know there are many of you out there that are looking at this show and saying, why are we talking about credit cards? Listen, credit card companies and banks basically have done a really good marketing job to have you believe that you really need them. We're here today to show you that, listen, you don't need them. They need you. And that's a really radical concept because you guys have had credit cards basically since you got into college, right? They gave you the applications in your textbook. And there is no parting between you and your credit card. I'm here to break that symbiotic relationship, that almost abusive relationship that you have with your credit cards. Why do I say this? Again, let me reiterate. They need you. You do not need them. And why? Cash is still king. If you have cash sitting in your savings account, in your mattress, under your mattress, in your tin can, why do you need a credit card? Why do you need to borrow from the bank if you have your cash? Why do you need the bank if you've prepared for when something happens? If you've prepared for the purchase of that car, if you're prepared for the purchase of that home, if you're prepared for the purchase of that lovely dress that you know you're going to need, why do you need a credit card? Why do you need a retail card? Why do you need any card? Again, what we're trying to do in this show is to really, at its core, show you what a credit card is. Show you the burden of carrying this credit card. Show you the hindrances and the road bumps you're going to get into with this credit card. We'll be right back with more on credit cards. Out of the amount of money you're making, out of your total gross income or net income, 50% of that money should pay your rent or mortgage, food, your utilities, the things that you need, you must have in order to exist. 30% goes towards your wants. Now, what is a want? There are many of us that believe that we must have the latest iPhone every time it comes in. And it's somehow unnecessary. But that's a want. There's some of us that believe that we have to have a cable box in every bedroom in the house. And somehow it's unnecessary because the child must have a TV in his or her room. And they need a cable box. And you need a cable box in the kitchen. You need a cable box in the living room, family room. You feel like you must have cable boxes every single place. Feels like unnecessary, but I hate to break it to you. That's a want. Welcome back. Now let's get into the nitty-gritty of it. Here we are talking about credit cards. And I know for years you've probably had this relationship with a credit card and you've seen it almost like as an asset. We're here showing you that maybe it's not quite an asset. It's probably a liability. It's definitely a liability. Now, you're in on these credit cards, you're in on these charge cards, you're in on these retail cards, and you feel like you can't live without them. Maybe another option is getting a secured credit card. Now, what is a secured credit card? A secured credit card is merely you putting money on a card. So you will go and get a secured credit card for $500, for $1,000. You getting a card where you've put your own money and you're always using your own money. What we're trying to get you to understand is credit card is merely borrowing. And we want to get from a society that borrows to a society that saves and pays cash. Saves and pays your own money. When you walk out of the store, even on a secured credit card, when you walk out of the store and you bought that lovely dress for $200-300 and you used it on your secured credit card, you're using your own money because you've had that card, you've put on that card that $300 or $200 or $100 that you've used to buy the wonderful dress. That's what we're trying to get you guys to understand. Listen, you don't need a credit card. Again, you do not need a credit card. If you have your Visa debit card, which is basically your card that's linked to your checking account and your savings account. Again, if you use that card, you're not worried about getting a statement in 30 days or getting a statement in 50 days. You've used your own cash. We're moving from a borrowing society to one that saves and pays cash. Okay. We're going to delve into basically the effects of carrying these credit cards around in your wallet. You're walking around with a liability, and here's why. In the 12 months prior to March 2011, 9% of American adults have been making their payments late. This is in comparison to the 12 months for the same time period in 2009. So what we're seeing is we're seeing an increasing trend in people, or many of you out there who are looking in on us, we're having a hard time meeting these credit card bills or these credit card payments. We're paying them late. Why? Again, you're going to hear this running theme. The banks need you. You don't need them. But they need to lure you in. So they lure you in with these 0% interest rates or really low interest rates and, these teaser rates telling you can move your card payments from one card to the next. They do all these marketing schemes to get you in. Now you're in. What do? Let's stop and think for a moment. If you take a $100 cash advance on a card, you walked up to the ATM and you borrowed basically $100. What are the repercussions? As opposed to having $100 cash in your wallet and just carrying that $100 cash. What are the repercussions? If you were to pay that $100 back, they're going to require that you pay minimum payments. And what they don't tell you is those minimum payments is based on you paying back that $100 over 30 years. And when you take a cash advance, that cash advance usually has a higher interest rate rather than if you went in and made a purchase. So for simplicity, you borrowed or took a cash advance of $100 and you're paying that $100 back at 30% for 30 years. So you got $100. How much are you paying back? At a minimum, you're going to pay back $130 because remember the interest rate is 30%. If you took that $130 and paid over 30 years, you literally could pay back somewhere in the neighborhood of $1,000 when all you really got was $100. Why do you need this? Why is this a good marketing or it is a good marketing scheme for the banks. But why is this a good financial or good fiscal habit to have for you? Why is this good for you? Why is it good for you to borrow $100 but owe $1,000? There is no answer. This is why we're going into the effects of these credit cards. They're not there to help you. They're there to make the banks wealthy on your back. So guys, cash is still king. If you walked into the store or you got $100 or took $100 out of your savings, out of your checking account, and basically used that $100, you would be free. Guys, cash is still king. If you had walked into the store, spent your own $100, got whatever it is your heart desired, walked out, you would have owed nobody anything. All you would have done was spent your own money. Cash, my friends, is still king. I'm not here to sell you fairy tales. These credit card companies sell you a hymn and a dream. I'm here to tell you it's still best today, 2012, to use your own cash. Credit cards need you. You don't need them. Think about this. If you file a bankruptcy and you owe the IRS money on your tax refund or return or whatever, and that debt is more than 3.5 years old, you could file a bankruptcy and have it discharged, meaning the IRS could never come after you for that money. With student loans, you have to be crippled from the neck down before you can get rid of it. You have a kid that comes out of school with a law degree in basket weaving, right? His job is going to pay him $10, $12, $13 an hour, but he has student loans in excess of $250,000. How is that kid going to pay it back? And that kid has no ability of getting rid of that debt. There's no way they can walk away and say, plead to the federal government and say, I can't pay this back, cut me a break. You're a kid, you come out with $250,000 in loans. That's before you eat. That's before you buy food. That's before you save. That's before you get a mortgage for your house. So straight out of the gate, you owe someone $250,000 with interest. If you were to pay off $250,000 over 30 years, you're still making payments of somewhere in the neighborhood of maybe $2,000 a month. Think of having to turn over $2,000 a month out of your check before you eat. You know, I have people walking into my office and they said, I'll ask, did you save for your baby's education? They were like, no, because, you know, when they go to school, they will get loans. No. No. And why I say no is if you save $100 a month in a 529 or something from the day the child is born, you theoretically could have somewhere in the neighborhood of $150,000 when baby is 18. So then you're writing checks. You're not going to FAFSA, NOFA, nobody. You're just writing your check and sending your kid to school. Another thing you have to think about is this. Your kid comes out of college with $200,000 in student loans, right? You have other children that walks out of college with nothing because their parents prepared for what was to come. So, 2 kids come out, same degree, same grades, same job, paying the same money. One comes out with no debt, the other with student loans. The kid that comes out with no debt moves on with their lives. They're able to save for their retirement straight out of the gate. They can save for the purchase of their home straight out of the gate. They can pay for their wedding straight out of the gate. They can start their lives right away. The kid that comes out with debt has to wait. They have to wait because they have this morass or this albatross hanging around them called student loans. Those of you who haven't saved, didn't put any money away, avoid taking the student loans out by doing what? Look at community colleges, work-study programs for the school, grants, scholarships, whatever you can use and whatever resources are out there, make use of them. Hi, this is the part of the show where we try to answer your questions. And we have a question from Jen on Facebook. And her question is something like this, very typical. Shouldn't my son apply for a credit card prior to leaving for college? Jen, I've said this many times. Credit cards are not your friend. And credit cards will not be your son's friend. We need to move from a credit society to a cash society. You need to start your son now to understand the fact that credit is borrowing, and he needs to set up his life, even his very small financial life at college, using just the cash you send him, using just the cash he earns. So no, my answer is definitively, do not have your son get a credit card prior to going to college, and do not have him get those credit cards, which he will be bombarded with while he's at college. We'll be right back.
Questions you want answered? Connect with Georgette on Facebook.
Hey, Georgette. What about credit card rewards? Can't they sometimes justify the earning and use of them?
Well, credit card rewards are basically a marketing tool for banks to get you indebted to them. So if you're disciplined enough, of course you can get a credit card that has rewards. However, the only way to have a credit card and make it worth your while in such an event is to use that credit card as if it's a charge card. So you do not, and I repeat, do not charge anything on that card that you cannot pay off in full 30 days later. Because again, you don't want to borrow from the bank to go around and pay them back interest. You want to borrow from the bank, but get the rewards, but pay it off in full 30 days later. All right, guys, this is the section I like to call, we're going to demystify the foolishness. And the foolishness here is credit cards. A lot of us have set up our lives over the last 30 years in a false sense of prosperity. And what do I mean by that? I mean, we've set up our lives to have credit cards as our cushion. Time gone by, the cushion was the time of our grandparents. The cushion was the cash we had under the mattress, the cash we had in our savings accounts. We always had cash to fall back on. Now in today's society, we have 4-year-olds asking their parents to whip out the credit card to buy their new toy. We see this credit card as this integral part of our financial lives. And it has led us to what? Absolute chaos. I've seen one too many times clients come into my office and their deficit spending is the credit card. What do I mean by deficit spending? It means we go into the store and we can't quite afford this tie, we can't quite afford food, we can't quite afford gas, and we think to ourselves, yes, I can afford it because I have a piece of plastic that can pay for it. No, 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 no. Cash is still king. If you've set up your life so that you need the credit card to live your day-to-day life, you're setting up yourself for financial ruin. We need to go back to the place, or we need to force ourselves to go back to the place where we live within our means, and our means is our budget. So yes, we need to pull out that B word again, budget. We need to set up our lives so that we are spending what it is we can afford. You live below your means always, and you save and invest the difference. For instance, your one weekly budget, your monthly budget is $100. We need to set up our lives so that we're living on $80. So that $80 has to pay our rent, buy food, pay for the gas to get to and from work, pay for our utilities, and we should be saving at least $20. So guys, cut up the credit cards, shred them, do whatever it is you can do to get rid of them, but get rid of the credit cards and set up your life so you're living today, tomorrow, and every day from this point on the cash that is coming into your home. Okay, on this episode we talked about credit cards and the fact that if we live our lives with a dependency on these credit cards, we're setting up our lives for a financial disaster. We need to break our dependency on credit cards, and if you take away nothing from this show, you will take away this. Cash is still king. What do I mean by that? If you have the choice between buying something on credit, not buying it at all, and buying it with your own cash, If this thing is a necessity, buy it with your own cash. If it's not a necessity and you cannot afford it, then the choice is not to buy it at all. Thanks for joining us. And I hope you take away from this show, cash is still king. And I'll see you guys next week.